Morning everyone. Welcome to today's webinar on how to improve your client's cash flow. So as everyone probably knows, cash flow and lack of cash liquidity in businesses is the #1 reason most businesses fail. So this is a crucial area to be able to provide your clients with insight and advice. What we're going to cover today is 3 main areas. The first area is the danger of late payments and lack of foresight. We'll then run into how to help clients get paid faster, and then into how to avoid future cash gaps. Who you've got online today? I am Nick. I'm the CMO at Float. We have another 3 lovely people who are able to provide some insight and explain how our experience and apps can work together alongside your cloud accounting platform to help improve cash flow insight. So we have Rachel from GoCardless, we have David, who's the founder of Chaser, and we have Marc Probert, who's the managing partner at Cactus in Agencynomics. Marc is going to kick off. He can introduce himself and enjoy what Marc's got to say.
Morning everyone. So I'm Marc Probert. I'm a consultant specialising in advising owners of digital marketing agencies across the UK. I help them define their vision and values, implement roadmaps and processes to achieve their goals. Our consultancy, Cactus, is recognised as one of the leading specialist advisors in the UK. I'm also managing partner of Agencynomics, which is a social enterprise dedicated to helping global agency people get access to knowledge and data. We launched our book last year, and I'm proud to say it's become an Amazon bestseller. A qualified accountant, my main aims of expertise are finance and operations, i.e. I'm a CFO really. I've over 20 years experience advising companies of all sizes in both the UK and overseas, and in the last 4 years I've specifically dedicated my time to advising marketing agencies. So, first slide today, the danger of late payments and lack of foresight. Danger Mouse. You may recognise this picture, a cartoon character famous in the UK in the 1980s, a secret agent who loved dealing with danger, often helping his reluctant assistant Penfold out of perilous situations. How on earth are you thinking, I presume, does this tie in with today's webinar? Well, what are the dangers of late payments and lack of cash flow foresight for a business? And how would Danger Mouse, our hero, mitigate these? The biggest danger I often see is Penfold. He's the guy who often causes the perilous situations. AKA in business, it's often the owner or the founder, AKA the eternal optimist. They're often the ones chasing the sale. They're so proud of their service and product. They're so proud to the extent that process often goes out of the window. And even though invoices may go out, I nearly always see the last thought is about how to chase the debt. And often a company has no consistent processes in place. So some of the other dangers of late payments and lack of foresight. The first one for me is, obviously, if you don't get paid, you may not be able to meet your payroll costs. And owners often themselves don't get paid. This can lead to a disgruntled workforce, your team leave, clients may move on, and owners can become negative and lacking in confidence, which can lead to a loss of company focus and sales, etc. And actually, some interesting market research I've read by our friends at GoCardless suggests that in France, 50% of small business bosses have had to sacrifice salary due to being paid late. And in Australia, more than 6 out of 10 business owners have had to forgo their own pay, holiday, or hiring new staff because customers have often left them out of pocket. Another danger is that suppliers can't be paid. If you don't start keep paying your suppliers on time, then the supplier's trust disappears, and this can often lead to a company not being able to get the expertise that they need to help to service their clients. A couple of other danger around late payments, and probably in some ways the more important ones. In the UK, a company can suffer with HMRC issues, where a lack of cash flow into the business can often cause them to be unable to pay their payroll and company taxes, i.e. VAT and corporation tax. And these can often mean investigations and significant penalties for the company. And probably the biggest danger of all is the last point, administration or liquidation. If a company is struggling and ultimately fails, then the directors of the limited company will not normally be held liable for the debts of the company under UK law. When a business becomes insolvent, i.e. it cannot afford to pay its debts when they become due, the directors have a statutory duty to act in the best interests of the company's creditors. For example, directors of insolvent companies must not continue paying shareholder dividends while the company is insolvent. They must not continue trading with no intention of repaying creditors, and they must not repay some creditors, but knowingly not others. And if a company is found to be wrongfully trading, the directors may actually be personally liable for all the debts that they owe. So some of the excuses, I'm sure you've all heard a number of excuses, and there are some real gems out there, but some of the common excuses, again, as referred to in the link at the bottom, the GoCardless blog. 1, we haven't received your invoice. 2, your check is in the post. I mean, who writes checks now anyway? 3, we haven't been paid by our clients yet. 4, the person who authorises your payment is not in the office today. 5, there's a problem with your work. I mean, I'm sure we've all heard these, and these are the age-old excuses that get rolled out for not paying debts. So, on to the next slide. How to help clients get paid faster? For me, this slide really summarises the key things that need to be in place. So what I'm suggesting here is, going back to the Danger Mouse scenario, how could Danger Mouse actually help Penfold out of his sticky predicament of not getting the cash into the business? First of all, I would always advise any client or contact to revisit their payment terms. The default for a number of companies I see is 30 days payment terms. Many agencies I work with or know of, nowadays we've got them down to 7 or 14-day payment terms, and that's if direct debit systems aren't used, for example, like GoCardless. The second thing I would concentrate on is restructuring your payment profile and getting this clear in your terms and conditions. And what I mean by that, if I use a web agency, for example, where often it's project-based work, I would really try to get them to invoice 50% deposit up front, paid in advance, 25% at the first milestone of the project, 20% at the next, and 5% at the final sign-off or release of the site. And I would also insist that site's never released until that final payment's actually made. Another way of looking at your work is to package it up perhaps in retainers, so you sell your time and value for the month ahead, and then you get these retained clients set up on direct debits, for example like GoCardless, up front at the start of the month, so you get paid immediately at the start of the month. People always challenge me on this one, but actually this does work. People should be looking at doing this as much as they can. The fourth thing for me is actually implementing a rigorous debt chasing process. So forget the fact that Penfold's still high-fiving his friends in the office because he's won that contract. Let's get a process in place and start rigorously chasing our debt. Consider using a software, for example, like Chaser to help. Always get a human element to the debt chasing process, though, in my opinion, in terms of regular phone calls to the clients. Also following on from those automated chasers that can come out from a system like Chaser. I would always credit check any opportunity. Those so-called perfect clients and the big opportunities you get, they're not always credit worthy. So should you actually be working with them in the first place? Point 5 for me is stick to your terms, not the client terms. We've all heard of that client that you win, the big client that implements 60 or 90-day payment terms with you and actually almost kills your own business. Stick to your terms. I know it's tough. Get your T's and C's clear. Use good cop, bad cop scenario, i.e. your finance person perhaps chasing the debts and not the owner. But always stick to your terms. And the final point for me, and it may sound harsh, but is go legal. If it really gets to the point where you're not getting any joy, you're hearing all the excuses, your payment terms are being breached, you've been clear in your T's and C's, the way that you as a business anticipate being paid, then go legal. It's not necessarily a bad thing. And actually, I think you've always got to remember as a business that the person doing the debt chasing is often not the owner. And so the relationship that you've got with the end client is a different relationship. It's finance person to procurement, for example. So actually going legal, in my view and in experience, actually is if it's done in a nice way, with a nice wording, a nice letter written, look, our T's and C's, this is what we set out at the beginning, and you've not adhered to them, then actually often debts can be recovered and the relationship continues. And if you're really stuck, Google HMRC statutory demand, as there's some great help there in terms of how you chase the debt legally. I'm now going to hand you over to both Rachel from GoCardless and David from Chaser, who will give you a bit more insight into their fantastic products.
Perfect. Thank you very much for that introduction, Mark. Hopefully you haven't heard too many of the excuses that were shared just now. We've heard some amazing ones here at GoCardless. People have even seriously shared the my dog ate the invoice, which you would think people would be over by now, but apparently not. So my name's Rachel. I work in our partnerships team here at GoCardless, and that means I spend a lot of time with accountants, small businesses, and accounting software, thinking about how we can improve cash flow. So GoCardless is a payments company, and we specialize in recurring payments. As we'll explain a little bit later on, this doesn't mean fixed recurring payments, but basically businesses like yours and many of your clients where you have an ongoing billing relationship with that customer. Basically, you're taking money from them more than once. So that's the kind of headline of what we do. But really what we're here for is to take the pain out of getting paid so that you can focus on what you do best. I think it's probably fair to say that very few businesses started out their enterprises with the aim of spending lots of time on payments admin or chasing up payments. And what GoCardless is really here to do is to take away some of that pain so that you can get back to what you actually went into business to do in the first place. And there's really good reasons for that. We've already heard some of the kind of stats around how this really impacts people, but it can take 38 days for the average small business in the UK to get paid. And that's typically on 15 or 30-day invoice terms. 63,000 small businesses are £63,000, sorry, is the average that small businesses are owed in late payments, which is a huge amount of money for a small business to have tied up in cash flow. And there's a whopping 50% of small businesses with negative cash flow. And this has very real human effects. You know, it's not just the challenge of the accounting side of things. The stress, the impact this has on the rest of the business is really, really real. So what GoCardless is doing is building a solution on top of the direct debit system to enable businesses to take payments easier. So if we start with what direct debit is, direct debit is a pull-based payment method. So this means instead of waiting for a customer to push funds from their bank account to yours, so if you imagine a card payment, a standing order, or a bank transfer, with direct debit, you're actually pulling funds directly from your client's account as soon as the payment is due. In order to do this, you have to have what we call a direct debit mandate set up with the customer. This is essentially permission to take funds from their accounts as long as certain rules are adhered to. And what GoCardless does is handle all of that compliance for you so that you can access this brilliant system of pool-based payments without having to worry about all the regulation around it. But ultimately, this all leads to three kind of key benefits. So the first is that you get paid on time every time. So if you're getting paid with direct debit, you're in control of when the payment is due. And that means you're in control of your cash flow. So in the majority of cases, you're going to get paid on the invoice due date without having to lift a finger. This means that you're going to save time. You don't have to chase up payments quite so often, and you don't have to worry about what's coming in and what isn't. Something we hear a lot is that the visibility of payments that are coming in is really important to small businesses as much as getting paid on time. If you think about payments that are being made by standing order, for example, sometimes it's not until the end of the month when you're running through the accounts that you realize that a client has stopped paying you. With direct debit, you can have real-time notifications and a real-time view of your cash flow, so you can handle any clients who might be falling foul of your agreed payment terms well in advance. And this basically means it's better for client relationships. So whether it's for you or for your clients, no business wants to be spending time chasing up their customers. You want to be building a relationship so that you can have a better business relationship with them going forward and ultimately do higher paid work. If you're spending a lot of time on chasing them, we know how painful that can be for the relationship. Direct debit takes some of that pain away. We also keep our fees super transparent and really low cost. So GoCardless charges 1% per successful transaction with a minimum of 20p and a maximum of £2. So compared to some other payment methods that are out there, direct debit is kind of structurally cheaper. We don't have the middlemen that card networks have, and that enables us to offer really low transparent pricing for our customers. So you might be thinking that sounds great for fixed payments, but what about variable payments? So we kind of heard about agencies a little bit earlier on. An agency may well be charging their client a different amount every single month. And you may be thinking, well, that's not going to work for direct debit. Well, actually, direct debit is a really flexible payment method. Once that direct debit mandate is in place, you have permission to take funds from your client's account on an ongoing basis. It could be variable dates, it could be variable amounts. You could charge someone a large bill in the summer and then nothing till Christmas and then 3 times in January. And you could do that all on the one mandate without your customer having to do anything again. Or if you do have fixed recurring payments, this is a great way just to automate some of the admin out of handling those clients. So that's kind of a little bit about why direct debit, but why GoCardless? Well, direct debit has traditionally been a really hard payment method to access, particularly for smaller businesses. And GoCardless is trying to change all that and make it really accessible, really simple, and ultimately better than the system that it used to be. So we've made it paperwork free, I'm sure you'll be pleased to know, fully online so that you can get your customers set up really quickly and easily. We handle all the compliance and complexity for you, so you don't need to worry about the rules of direct debit. We integrate into many accounting packages and other softwares so that you can automate your processes end to end. And really crucially, we've made it accessible to smaller businesses. So on our kind of standard packages, it's really pay as you go. So you could sign up for a GoCardless account and take just one payment and then decide to do something else. And we'd only ever charge you for that one payment. Or you could just have a few of your clients on this, or you could gradually move your entire business over to direct debit. This is really open to everybody. And that's quite different to the way that direct debit was run in the past. So here's a sense of what this really looks like. So this is one of our direct debit mandate forms, and your customer, so the person who's actually paying the bill, fills this in to give you a permission to take funds from their account. This is a really simple online form. They fill this in once, and then thereafter, you take money from their accounts when the payment is due, and we notify them 3 days before that happens. So your customer is always informed, they always know exactly what's going on, but they don't have to enter their details multiple times. So for any of you who filled in those really long direct debit forms, perhaps at the gym on paper, where you have to specify whether you want the 1st, the 5th or the 15th of the month or various other complicated things, hopefully this form shows you how simple the process can really be. Then once you've got that mandate in place, you'll be wanting to think about how you integrate that into your systems. So you can invite customers in multiple ways. So you can send them an email, and here you can see integration into GoCardless for Xero. So you can send your Xero customers an email with a link to set up a mandate. You can then schedule payments for existing invoices, or you can choose to set up payments outside of an invoicing software if you'd like. And then when the payment comes in, if you've connected up to an accounting platform, we'll reconcile it for you. And that's at the payout level. So you don't need to go through every single invoice and work out, well, I charged my customer £100 and then GoCardless took a £1 fee. So which payment is this? We do absolutely all of that for you. So all you have to do is sit back and watch the money come in. But you don't have to take our word for it. GoCardless is used by about 40,000 businesses, and that includes 3,500 accountants taking their own fees with us, and tens of thousands of small businesses. And as you can see here, around 80% spend less time chasing invoices, have seen improved cash flow and reduce their debtor days. We were also really, really proud to be named Xero's App Partner of the Year for the 2nd year running, I might add, this year in 2018, following on from last year. And for accountants in particular, we've seen that reducing debtor days is a really, really key benefit of switching over to direct debit with GoCardless. Here you can see the correlation between the percentage of payments that are taken by direct debit and the average debtor days of the firm. And we've seen over and over again that switching your payment method, even for a proportion of your clients, can vastly reduce the overheads that the business is dealing with. And we've got some support to help you and your clients get started with this. We know that switching payment methods can feel a little bit daunting. And even if you're told it sounds really simple, the idea of changing how you bill can feel a little bit scary. So we are here to help. The GoCardless Accountants Program gives you education advice for your practice so that you can talk confidently about payments with your clients. We give you exclusive benefits, so we give you the ability to pass on a few months free for your clients so that they can give GoCardless a go without worrying about any commitments. And then plenty of tools to get you started. So everything from demo videos to quick start guides to how to deal with excuses from people who might be a little bit harder to win over to a new system. So that's my whistle-stop tour of GoCardless. I'm now going to hand over to David, who's going to share a little bit more about the other side of the coin. So for when those clients don't pay you by direct debit, what do you do to make that process as painless as possible?
Brilliant. Thank you very much, Rachel. Good morning, everyone. I'm David Tuck. I'm the founder and CEO of Chaser. And yeah, really excited to share with you today how you should be helping your clients improve their credit control and consequently their cash flow with Chaser. So a quick bit first about who we are. So we're the market leaders in cloud credit control software. And what that means is we're helping your clients address the pain of unpaid invoices by running credit control more effectively. And in the process of doing that, saving them time and making that a much more efficient process for them to carry out. We integrate seamlessly with Xero QBO and Sage Accounting as cloud accounting software products, such that once sales invoices get generated in there, we automatically pick them up as Chaser. And just before going any further, I thought it'd be really useful to cover off how we fit in alongside GoCardless, because often there can be a misconception that we're competitive products. And the reality is, as Rachel said just now, that we're two sides of the same coin. GoCardless and direct debit is always best if you can get your customers to agree to it. With Chaser, you then have the ability to tailor schedules specifically for your direct debit customers. So, for example, to chase them in the event that the direct debit doesn't go through due to insufficient funds in their account. And then Chaser comes in to chase all customers and invoices that aren't covered by direct debit to help your client avoid late payment. So let's talk about late payers. At Chaser, we found there are three categories with the acronym DAD, so delinquents, accidentals, and deliberates. Delinquents are those who don't have the funds. There's nothing you can do about this. They're failing businesses. Now, our research shows that less than 0.1% of invoices fall into this category. The overwhelming majority are the whens, not ifs. Those invoices are going to get paid on time, and that's what we focus on at Chaser. So those are the accidentals. Those are the deliberates. The accidentals being that, frankly, they had more important things on their to-do list than remembering to pay your invoice. So it hasn't been paid. The deliberates, slightly more sinister. They acknowledge that the invoice is paid, but are opportunistically leaving the money in their bank account rather than voluntarily putting it in yours. And when it comes to late payment at Chaser, we like to say our 3 Ps: polite, persistence, pays. And why does it pay? For accidentals, because it reminds them of something that they meant to do but had just forgotten. For deliberates, it forces them to justify the unjustifiable of why are they continuing to pay, not to pay an invoice that everyone acknowledges is due. But as Marc says earlier, in order to be effective, that polite persistence needs the human touch. And that's what we're all about at Chaser. So otherwise, in a world of increased automation and data, it will just be ignored. And that's why at Chaser, we have the ability to send your chasers in regular email hours in line with when you do your bank reconciliation. A, so that you're not risking chasing customers about invoices that they've already been paid, and B, so that it just feels much more human. It's what you do manually. Tailor different emails for different customers, again, to reflect the nature of the relationship you have with them. Again, a point Mark mentioned earlier, leveraging that ability to bring in a bit of good cop, bad cop. So a more sort of cage rattling senior figure as an invoice gets more overdue. I was actually an accountant and finance director prior to starting Chaser, and I always found that really effective in the finance teams that I ran. Reflecting your regular email address and signature, no hint of a no reply at email address here. And then finally, when there's more than one invoice outstanding for the same customer at the same time, automatically grouping it into one email as opposed to sending separate ones at the same time on the same day. And then the other key thing in running credit control that you and your clients need is a complete CRM, a complete communication history of everything that's been said at different points about payment of that invoice. And it's a point that Mark made about the need to get on the phone. We find that about 80% of invoices can be successfully collected through email chasing alone. And that's just huge if we step back from that, because we're giving you and your clients the ability to automate that with Chaser. We're saying that 80% we can remove that manual workload from. Yes, there will still be some that need a phone call. And so for those 20%, it's absolutely essential that when going to make those calls, the person doing so is armed with the full communication history of what's been said to date. Or in the event that you do need to go down to the legal route, that you have a comprehensive audit trail to fall back on. And so what we do is we log all of the emails sent, but then automatically all the replies that go back and forth between the customer and the supplier. Phone notes can then be easily added at the click of a button. So no more routing through inbox sent items to piece things back together. An instantly accessible full communication history when it comes to credit control that anyone who's a stakeholder in that client's credit control process can access anytime. So the results that we deliver, so really, really proud of just the tangible benefits that we're able to provide. So an average 16-day debtor-day reduction to our users, and that's a cash flow boost of £4,400 for every £100,000 of payment terms turnover. Accelerating cash out of working capital that they never need to give back once they maintain their debtor days at that new Chaser enhanced level. So effectively a free investment in their business. And then the average Chaser user saves 7.3 hours a week, so effectively a working day a week from having to carry out credit control manually. And then in terms of how we work with oh, cool. I thought we had another slide there. Very good. Thank you very much. So what our users say. Really proud of the recognition we've received. So being the 4th highest rated of the 700 plus apps across all of the categories on the Zero App Marketplace with over 300 reviews at a perfect 5.0 star rating. Prior to kind of GoCardless's reign of 2017 and 2018, we won Xero's App Partner of the Year. In 2016. So again, the two sides of the same coin. You're in good hands, great hands, dare I say, with both of us. And then won the Accounting Web Software Excellence Cloud App of the Year in 2017 and 2018. So really proud of that recognition as well, of us as a best-in-class product. So how do we work with you? How can you work with us to help your clients? So the first thing for us to say is accounting and bookkeeping partners are our lifeblood at Chaser. They're our prime way that we kind of go to market and help the SME population. And we have a fantastic partner program for you. So there's preferential pricing that enables you to offer Chaser at a mutually advantageous rate to your clients. And then we've got a fantastic partner success team that will provide you with all the resources, the account management, the assistance, the training you need to, from the very beginning, identify the clients who could benefit from Chaser, how to most effectively communicate with them, and then go about getting them set up to derive full benefit from us as a product before equipping you with the ability to deliver ongoing advice to clients about how they can and should be best carrying out credit control. And that just brings me to my final slide and the future of credit control. So one of the things we're hugely excited about at Chaser is the next frontier of the virtual finance function. And so that's you as trusted business advisor providing virtual credit control as a service to your clients. And it's something that we're really proud and incredibly exciting to be pioneering with our kind of in-house credit control consultant team, who work with our partners to help them develop the blueprint for and pilot this offering for their clients. So we're really excited to work with you. We think this is such a kind of fundamental change because it democratizes your client's ability to access great quality credit control that some, the larger clients with in-house finance teams will have had previously, but the overwhelming majority, where it's just a lot of the cases a small business owner or someone kind of in an admin role who's been picking up the credit control responsibility and as a result has not been able to achieve great results. You are now going to have the ability, with Chaser as the platform underpinning it, to deliver it as a fantastic win-win, because it's a great new kind of revenue stream for you, but a great kind of benefit and improvement of outcomes for your clients as well. So thanks very much, everyone. If you do have any questions, please fire them through in the chat, and I look forward to discussing at the end. And over to Nick from Float.
Thanks for that, David and Rachel. I mean, ultimately, who doesn't want to be paid faster through either of those routes? And as David said, they are really genuinely complementary. So we're going to now talk about cash flow and how to help your clients and your practice avoid cash gaps. So I'm going to pass back over to Marc, who's going to give a little introduction to this.
I'd just like to reiterate that actually my experience has shown me that GoCardless and Chaser should be implemented in any business. I wouldn't wait to do this. They will massively help you. However, many companies still have cash flow issues. For example, if its expenditure goes awry, that lavish entertaining budget that you have. Many small businesses I see do not forecast either their income and expenditure nor their future cash flow. So as a bare minimum, I like to try and get any client working on a rolling 3-month cash flow forecast, as I say, as a minimum. How else does the business know everything is going to be okay in terms of mitigating its liabilities and financing its activities? So how do you mitigate the risks of cash flow gaps if your cash flow is poor? To ensure any nasty surprises, for example, bad debts, pipeline gaps, aren't going to threaten the existence of your business, I would always suggest getting an overdraft with your bankers. It may never be needed, but it enables a buffer to deal with those nasty surprises. You never actually have to use it, but it's step one for me in protecting any business against future blips. An owner needs to be wary that there may be guarantees needing to be put in place by the bank, for example, personal guarantees. But actually, I often see overdrafts of, say, 25,000 put in place without the need for these personal guarantees. Other well-known methods of non-equity finance in the UK, which I'm not going to talk about equity finance today, include invoice financing and factoring. So invoice financing, there's products out there, for example, like Market Invoice or GapCap in the UK. Invoice financing can be selective. So this means you actually borrow against a specific invoice only, say, for example, 80% of it, where the rest is then advanced to you, less any fees when the customer pays. You can actually set up these facilities often without charge, and if you never actually use them, then you won't incur the fees. So again, they're quite useful as a buffer. Factoring. This usually involves selling your entire customer invoices to a funder, who then actually advances a percentage of the total to you in advance, with the rest paid, again, less any fees, on recovery from the client. This often involves actual charges up front for setting up the facility, and it can actually be quite cumbersome for a business to get out of once they're signed up to contractually. Both these options are often used for generating working capital into the business, and both methods of getting cash flow into your company draw down on income that you've actually earned. You haven't actually got the income yet, but you've invoiced for it, you're entitled to that money. So neither are actually forms of borrowing in advance of actually having confirmed work with clients. A loan can often be different. These are often used for one-off projects. For example, I see them used for capital expenditure, financing an office move or refurbishment, maybe acquiring another company. So whilst percentage charges for loan repayments are often lower than invoice financing and factoring, there is usually obviously a longer term commitment, say for example 3 years, which the business owners need to feel comfortable with in terms of confidence in future sales and positive cash flow of the business to enable loan repayments. In the UK, loans are often arranged with bankers, but much more common nowadays are providers such as Funding Circle or iWalker. I don't actually recall having used a banker in the last 2 years to provide a loan facility, given the other options nowadays. You can also use a platform like Funding Options to search the best options in the market. And these options often enable almost instant access to a cash. I've sat in a board meeting before and actually drawn down on a loan by the end of the day. However, as much as access to funding for established businesses can often be easy to obtain, some people don't believe this, but it can be quite easy nowadays, why borrow when the company can actually be able to self-fund itself, or should be able to self-fund itself often? It's often down to non-existent or bad cash flow forecasting. I'm afraid I've previously been guilty of this, but the age-old tool for accountants has been spreadsheets for cash flow. We all love a good spreadsheet, be honest. But how many times have we seen a formula broken and cells with manual entries which throw out unusual, unexpected results? The cloud has enabled accountants to adopt online tools that aid more efficient, integrated, and on-the-pulse accounting numbers, for example, Xero. So why not for cash flow? Imagine being able to forecast various scenarios for the business, e.g. hiring plans, new service lines, at the click of a button, whilst actually pulling live data from your accounting system. I know that's how Flow has provided a number of my clients with a lot of insight to help them make well-informed strategic decisions and help me do my job to help the companies grow successfully. Nick will now explain more about Float. Nick?
Thanks, Mark. I guess right the way back to the subject of this webinar it's how can you help improve your client's cash flow position? So once your client has credit control software and direct debit set up, it's time to start looking at helping your clients proactively see and hopefully avoid those upcoming cash gaps. I think the key word here is proactive, especially in the age of advisory for clients now. This proactivity is becoming more and more valuable. So fundamentally, this requires an up-to-date and reliable view of exactly where your client's cash position is now and where it's going to be. So Rachel spoke about how GoCardless can help visibility, and Float provides this all-important visibility of the past and also then the future. So Float integrates directly with Xero, QuickBooks Online, and Free Agent to provide you and your clients with a visual, accurate, and intuitive view of their business cash flow. It's much more powerful, accurate, and reliable than a good old spreadsheet, which is typically, as Mark said, what's being used to forecast cash flow. And it's much faster and much more efficient, which makes it easier and more profitable for you to provide this service to your clients. So a little bit of background about Float. Float was launched on the Free Agent initially in 2012, Xero in 2014, and QuickBooks in 2015. Sorry, I've gone to the wrong slide. So what does Float do? Operational cash flow forecast software. Importantly, the operational term is important here. It provides a live view of your cash position. As opposed to pulling from P&L, it's cash-based. So it provides a really all-important short to mid-term. So 13-week is our sweet spot here. It can provide a forecast up to 3 years, but that 13-week operational view is really where Float is most powerful. It's simple to understand and use for business owners and accountants alike. And as I've said, it gives that visual view of live business cash flow and future what-if scenarios. So how can Float help you and your clients? Cash flow and cash management should ideally not be reactive. So cash flow issues are the biggest killer of small businesses across the globe. Understanding where you are, where your clients' businesses are, and where you're going is really crucial in mitigating risk, as well as seeing that opportunity that Mark spoke about. So Float takes a lot of the time and complexity away from forecasting and empowers you and your clients to make more informed, confident business decisions. With an increasing focus on providing advisory services in the accounting industry, Float enables you to be more proactive, as I've said, and work hand in hand with your clients to grow their businesses. Ideally, you want to see cash dips well before they happen, and not seeing these is the reason why lots of businesses end up in trouble. And Mark talked about that contingency and having things in place to help that unforeseen. But actually, the most powerful way to do that is to see things well in advance. Mark spoke about having that 3-month rolling cash flow view. So Float provides that live rolling view of exactly where your business is and where it's going to be. So you can see visually here on this slide a sample business's cash flow, forecasting this dip into the red at a point in the future. So this visual interface provides that at-a-glance insight for you and your clients, but it also enables you to dip in. Importantly, it really allows you to be proactive and intervene and provide that advisory service to your clients. So Float also really powerfully provides the ability to create up to 10 different scenarios per client, so that you can work with your clients to map and plan different hypothetical situations. So from that base actual cash flow, you can layer on different scenarios. So can we afford to hire a new employee? What happens if my biggest invoice is paid late? Can we afford to move to a new office? What happens if we have a dip in sales? Can I afford a new salesperson? What do they need to earn, etc., to justify their hiring? And I've relatively recently moved to Float, and prior to that, I was sort of more in the space that Mark was, in that I ran a marketing agency, and actually this sort of scenario planning was incredibly powerful as someone that runs a business with relatively spiky cash flow. It really allows us to think both positively and then from a sort of more negative mitigating perspective for us to make informed decisions. The granularity is there in Float as well, so that granular cash confidence is also really important. It's all well and good that you have this sort of top flow visual view, but Float also allows you to drill down into each individual transaction. It pulls all of your data from Xero, from QuickBooks, from your client accounting platform, and enables you to drill into each budget line, each transaction, to see how that will affect the bank balance moving forward. You can set specific date ranges, you can include or exclude specific bills and budgets to provide a very flexible view of your client's cash flow. Ideally, this is done alongside your client rather than you doing that job for them. You can manage expected payment dates on bills and invoices. It gives you and your clients a view of invoices due and bills that are yet to be paid, that have not yet been reconciled in Xero or QuickBooks Online yet. You can then manage these individually within Float or in bulk and include, exclude from your cash flow view. You can change dates on these. If you know an invoice is going to be paid at a date, you've had that sort of verbal from the client, you can go into Float, you can change that date, and that will update that cash flow forecast and projection live. We've recently added a new feature in line with our focus on being very visual, that gives you an at-a-glance timeline view of these outstanding invoices and bills, so you can decide when to pay and when to delay payment. And that's really, really important from a business user point of view. As we mentioned about budgets, these are sort of the bedrock of Float. We can import budgets from your... Could we go back a slide? Sorry. Thank you. Float can import budgets from your cloud accounting software, but it also enables you to create multiple new cash budgets in order to forecast cash that's not yet in Xero or QuickBooks Online. So that is really, really powerful as a tool, because I guess, the live sync with Xero or QuickBooks is brilliant from an accuracy point of view. With Xero, QuickBooks, your cloud accounting is really the past. What Float is giving you a very informed, very accurate, powerful view of the future. It enables you alongside your clients to tailor cash flow forecast approaches to different clients with different challenges at different stages of maturity. So in terms of a little bit of background about Float, we've been around for a good while now. We launched on Free Agent in 2012, Xero 2014, and QuickBooks in 2015. We have more than 155-star reviews on the Xero marketplace. We were Best Emerging Add-on at XeroCon in 2014. We've won a bunch of awards, including the ICB Luca Award for Best Cash Flow Forecasting Software of the Year last year. So we are very, very reliable. We are stress tested. We're not a new kid on the block. We've been there, done that. And some of the accounting clients that we have, you'll see on screen just now, have Float really at the center of their app stack, that they provide an invaluable service to their clients. So Steph Hines from GrowthWise, this is a really good quote from her. She runs a firm in Australia and actually has Float plugged right at the center of how she provides advisory service to her clients. She often sits with Float and the client and looks and projects live using Float as that interface. Very like our other friends have talked about, we have a specific partner program which includes providing a free license for your firm, discounted pricing for multiple clients. Obviously, the more clients you onboard, the cheaper and better value it is. We have additional enhanced functionality for your view, for the accountant view and the partner view, as opposed to the individual business view. We provide free training for staff, webinars for clients. That onboarding pack of material and personal support is right there with dedicated account management. We also really want to help that education process. So we provide co-marketing opportunities and support. We'd be delighted to come along and sort of support events that you're running and run some co-marketing events and content. So a little diagram here. I guess it's interesting to see how our products that we've talked about today live alongside each other. And I think it's really important to think about that best of breed piece. So there is a lot to be said for choosing specialist best of breed applications like GoCardless, Chaser, and Float as part of an aligned and complementary app stack with your preferred cloud accounting software at the center. So this diagram sort of shows, I guess, the flow of where GoCardless would plug in relative to a Xero or QuickBooks Online. And then once that data is up to date in Xero and QuickBooks Online, how it then goes through and into Float and then potentially using Chaser for what they are excellent at. And I think in my personal experience of running an agency, we definitely look to our accountant to provide that recommendation, not only from an accounting point of view, but actually from a cloud solution perspective. I think that's increasingly what clients are expecting of you, not just to move them to cloud and stop there. It's that whole ecosystem of applications like GoCardless, Chaser, and Float that can help provide sort of very, very powerful insight and additional revenue for you and your clients. And I think that's really important. It is for you and for your clients. These products can make you more money. They can make you a much more powerful, proactive advisor as well, which is ever more important. We have a lovely guide that we've been working on with our friends who are on the webinar today, and that is a how to get paid on time guide. And as I said, who doesn't want to get paid on time? Hopefully this is helpful to you. You can see that there's a link on screen. If you just access that link, you'll be able to get that guide sent to you. Hopefully it's useful. There's a lot of insight in there. There's a lot of our expertise that's gone into there. Everyone who's spoken today has contributed to that. So hopefully that's a bit of an extension of the advice that we've provided today. So with no further ado, I'm going to pass back over to to Rachel. Thanks.
Awesome. Thank you very much for that. I don't think we can emphasize enough the importance of that best of breed app stack and bringing together the solutions that create a really good flow for you and your clients. And that means having a few apps that work really well together rather than relying on just one or two. So before we answer your questions, we've got one for you. So there are obviously a number of apps on the webinar today, and we want to know who you would like to hear more from. So just select all that apply, and someone from the team will be in touch to find out how we can help you or your clients more. So we'll just leave that up there for one more minute. You can see the disaster of my desktop while you all do that. Perfect. I think that's everyone. Thank you very much. So let's take some questions. So I'm going to throw these out to the apps at random. So get ready, guys. So first question for Float. Does Float integrate with NetSuite? And if it does it have the ability to upload CSV files?
So I'm afraid the answer to that is no, not yet. We can upload CSV files to create budgets, but unfortunately there is not yet a direct integration with NetSuite.
Cool, thank you. So I've got a question about GoCardless here, so I'll take this one. I've had a few questions about where we operate and where you need to be based. So I've got one about the US. So we are working on expansion into the US at the moment, and we're expecting that a little bit later this year. So for Sandy, if you're interested in getting on our kind of notification list and being the first people to know when we're live, do drop us a line. You can see our contact details on the screen there. We also had a question around South Africa. So South Africa is also on the list, but we're a little bit further behind in development there. So for South Africa, we're looking more towards the end of the year. And I've also had questions about Europe, Australia, New Zealand. So it's probably worth me just explaining where we operate. So the GoCardless product is currently available across the UK, mainland Europe, so all of the Eurozone, most of the Nordics, Australia, New Zealand, and Canada. So if you have clients based in any of those countries, you can absolutely use GoCardless. And if you are looking for the US and South Africa, it should be coming very soon. So question for Chaser now. Can Chaser do credit checks? Is there an inbuilt facility to credit check and record data to a CRM?
Great, thanks for that. So great question. Right now, there isn't. We kind of defer to sort of third-party credit checking providers, you know, your Equifaxes and your experience of this world. It's definitely something that we will look to embed into the product further down the line. It just, like, to be brutally honest, it hasn't been a sort of big enough priority to date with those kind of third-party alternatives that are available elsewhere.
Cool. So a couple more for GoCardless now. So a question about how long it takes for money to appear in the account. So in the UK, it takes 2 days from your customer being charged for the money to land with you. It does vary a little bit by region. And that's because it takes us a couple of days to get confirmation back from the banking system that the payment has all gone through successfully. And there was another question around our fees and whether our fees are for individual transactions or for batched payments taken on one day. So it is per individual transaction. So we charge our fee for each transaction that we take because we have to push that transaction through the banking system individually. But we do cap it at £2. So if you have got payments that are a little bit higher, then you will benefit from that cap. So we had a suggestion to pop the URL for the PDF that Float have put together on Cashflow advice into the follow-up email, and we will absolutely do that. That's a great suggestion. And there was another suggestion from someone to look at Capitalize as another option for credit. I don't know if anyone has any comments on those guys, but I do see them often at events, so I'm sure they are another good solution out there in the marketplace. A question for Float here. What's the enhanced functionality for the partner view?
So you get a dashboard view of all of your clients, basically, that you have on there, that enables you to go and access information for them. You can see different scenarios for those clients. You can log in to each of those clients there. So you basically get those 10. So that's the dashboard covered there. So that enables you to have access to however many clients accounts you've got running. Additionally, you also get up to 10 scenarios, which I'd mentioned for an accounting package. You also get 10 client logins per license. So that enables you to provide great value to your clients.
Awesome, thank you. And a final question from Patrick that I'm actually going to extend out to the group. So Patrick asks, when cash seems okay, how do you persuade a business owner to engage more with floats? One told me to get admin to do that. But I actually think that question is really applicable to all the services here today. If the business you're working with doesn't realize that they've got a big cash flow problem, how do you persuade them to start looking at solutions? Should we start with floats?
Yeah, I think this is one thing that potentially there's a perception about cash flow, and certainly as someone that's run businesses before, I think there's a perception that cash flow is only for businesses that are potentially going to be in trouble. And actually our view, and I'm pretty sure everyone will agree with this, is that cash flow is really fundamental, and it's not just a negative thing. I think this is a mindset thing for businesses and accountants alike. We often get people come in and saying, well, actually, I'm in trouble. Why do I need cash flow forecasting? It enables you to be proactive. It enables you to see the future. And a lot of the tools in Flow are every bit, if not more valuable, for positive planning than they are for reactive, negative sort of firefighting. So I think that mindset piece there from a cash flow point of view, the expense is relatively negligible relative to the time that it saves and the peace of mind that having something like Float can provide businesses on a day-to-day basis. We talked about Float being more operational, and actually we use Float, I know we're biased, but we actually use Float as just our day-to-day view of how the business is going. And we certainly have partners that do exactly that alongside their clients.
I suppose from my perspective as an advisor, not only having run companies, but as an advisor to many small businesses at the present time, there's an age-old saying that you may all be aware of: sales are vanity, profit is sanity, but cash is king. And I agree exactly with what Nick's saying there. Cash flow has an almost negative connotation often when you meet people, that you assume that there's a problem. But actually, for businesses that I work with, where my job is to help them grow and grow successfully and efficiently, we may be looking at, as I alluded to earlier, an acquisition of another agency, which I often help with. We may be looking at the buzzword at the moment, culture and vision and values. And what comes from culture? People always talk about staff benefits. They talk about, if we smash next year's target, we'll go to Mallorca as a business for the weekend. So how do you plan for these things? You plan for these things by having a robust cash flow, so that you're in a comfortable enough position to be able to do these. So I think, as I alluded to in my talk, cash flow is the crux of the business. Yes, you need sales, obviously. Yes, you need to make some profit, perhaps not in a SaaS business for a number of years, but ultimately, yes. But at the end of the day, the cash is the king. You have to have the cash to not only help the business to survive, but push forward and achieve really what the owner's goals and vision are.
And I think, long-term forecasting is all well and good. But actually, it's that shorter term, that 13-week view is what enables you to make decisions. It enables you to see what's happening, what is going to happen, and be able to positively or potentially, firefight, depending on what is happening within that business.
Couldn't have put it.
I just jump in?
Oh, yeah, David, do you want to have the final word?
Sorry, that wasn't my larger goal, but no, just because I think it's such a great question, Patrick, and it's something that we really grapple with and are constantly trying to help our partners with, because you like spot on, when it comes to kind of credit control and late payment, right? Like people do often fall into the trap of thinking, oh, this is just a reactive thing when I'm in times of crisis, and actually in a lot of cases by that time, things may well be too late. Bad habits are just instilled in your customers, and it's so much further to kind of to go to redress the balance. I always like to use the analogy of washing the dishes, right? If you do it, every day, then kind of things get taken care of. It's a little bit of effort, but if you let it build up kind of over time and just don't do it, then that's a huge task to then undertake to redress that balance. I think the other thing that we've found really effective is emphasizing that opportunity, that kind of free investment of, okay, you may have enough cash to pay your bills right now, but your debtor days are X and they could be 16 days less than that, and that would equate to, let's call it £45,000 of additional cash if you brought them down to the level that you could get them to. What would you do? And then framing it that way as a question: what would you do with an additional £45,000 of free investment? And then, if you're talking to the business owner, you may find them a hell of a lot more receptive, because, well, actually, I'd pay myself a larger dividend because I want to do an extension on my home or whatever, or we'd invest in bringing on board a new team member, a new salesperson who could help us grow as a business. So framing it that way, we found can bring kind of, really great results.
And I think, David, just one last thing. I think that's why, float and chaser work perfectly together, what you've just said. I think that, that view and then the ability to get cash in and have a really accurate picture of things is really powerful.
Awesome. What a fantastic note to finish on. Could not have put it so eloquently myself. I think this is all about how do we help our clients solve those challenges before they become a real issue for their businesses. I'd like to say thank you to everybody for joining us today. If we didn't cover your question, then we will be in touch after the webinar, and we'll make sure that everybody who wanted to hear from us does so. But have a fantastic day. Thank you.
Thank you.
Thank you.
Thank you.